Because if everything you have is intangible and inside the system, when something like this CME group meltdown happens, you are SOL. Now, having said that, I came across this article, When Markets Overheat, the suspiciously timed CME cooling failure that halted silver's historic breakout. Well, it only halted it for a second, but there are some that believe that this was a timed event. I can't say for sure one way or the other, but it is really interesting when you take a look at what happened with both the gold contract as well as the silver contract. The gold contract, boom, look at that dumperooski down, and then boom, it bounced right back up. Well, you had a similar kind of action sort of in the silver contracts as it was breaking out to new highs, which of course we've been talking about this technically and we've been watching it. Well, that also had a major impact on the visible price of the spot silver contract. But did that have an impact on the physical markets? Right? Things in the physical world do not work that quickly, and that's really what you want for the foundation of your wealth, is a sound money, physical gold and silver foundation. Now look, you don't always, well, actually every portfolio should always hold gold and silver as a foundation. But depending upon where we are in the trend cycle would determine the kind of gold and silver you need, as well as the amount of your portfolio that it should cover. And what have we seen? Well, we've seen Wall Street touting gold and silver now, physical. Why? Because there is a shift that's happening in this market. And it's not a sudden shift. It started last January when massive amounts of physical gold and silver were shipped over to the U.S. Somebody was taking physical possession. And that's left a massive shortage of both of those metals in physical form. I mean, in contract form, they can create as much gold and silver as they want to because it's never, ever, ever going to exist. That's your trading.